Hello, my name is Faisal Khan. I'm a banking and a payment consultant. A question I've been getting of late is, when we go for this regulatory, coverage in the United States, especially in the United States, and we want nationwide coverage, why do we ask for must-have states? What is the reason for asking a client which are the must-have states that you need, what would be considered as deal breakers? Well, here's the reasoning behind it. When you approach us, you obviously want nationwide coverage. Who doesn't want nationwide coverage in the United States? Pretty much everyone does. The problem is the banks and the institutions that have the licenses don't always want to work with you. And if you're new, if you are a startup, if you don't have an operating history, if your volumes are very low, if the target countries or the payout countries that you're working with are deemed as high risk, if the instrument or if there's cash involved is not acceptable to the banks, then you're deemed high risk as it is. They may or may not want to work with you. Chances are they love working with incumbents, they love working in low risk countries, they love working with direct account credits, no cash, etc. But that may not be acceptable to you. So why do we ask for the must-have states? In exactly these circumstances, when a bank or a credit union or a license holder in 50 states says, no, I don't want to work with them, now what do? So we go to you. We will find you independent small money transmitter license holders who are already part of our program, and some may be holding 5 licenses in a state, some may be holding 10 licenses, some may be holding 20 licenses, and some of them are overlapping in their licenses. So we have some redundancy built in. And that's where we need your must-have states, because then I will take that particular list and compare it with the existing licenses I have available through 1, 2, 3, or even 4 service providers, and try to match up and say, okay, Mr. Service Provider, would you work with them? Miss Service Provider, would you work with them? Would you guys work with these guys so that they can get all their must-have states? If you are working out of, let's say, I don't know, Papua New Guinea or New Zealand, Alaska may not be the state that you want because you may have very, very few citizens over there. If you are working out of Nigeria, or your payout is in Kenya and so forth, again, Hawaii may not be the place for you, or North Dakota may not be the place for you, or the citizens, the number of Nigerian or Kenyans in North Dakota is so low that if you don't get coverage in North Dakota, it's okay. So this is why the must-have states is important. And even in the must-have, you will never ever get everything else, because chances are the service providers may not have all the necessary states for you. So what you will get the bulk, the majority. What do we call the bulk and majority? The bulk and majority is always, if it's more than 75% of the population of the United States, or 75% of the population of the states that you are talking about, then it's a good take it, because at least you are starting off with 75% of your given market. It's not like you're saying, oh, start only with 10% of your given market, but you're starting off with 75-80% of your given market, and that I would take any day. I hope I was able to shed some light on this information as to why the must-have states is very important, and also the fact that in most cases, if you're new, the banks, the credit unions, the state chartered banks that we have may not decide to work with you. This is why the must-have states will suffice, and even in that you have to be cognizant that not all of them will be available, but a majority of them may come to you. Anyways, if you have a question or a comment, there's a contact form in the description below. Please fill it out. I'll be happy to talk to you. Till next time, Faisal Khan signing off.